Homegrown Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monogram.
Hello and welcome to Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Checking what happened overnight. Global equities rising, bond yields and the US dollar falling on soft US economic data, which also saw commodities rally on heightened expectations of interest rate cuts. Weakening US labour market conditions emboldened investors on Wall Street, with the S&P 500 and Nasdaq rising to new record highs. However, the Dow ended slightly lower, pressured by selling in healthcare and consumer stocks in a shortened trading session ahead of the Independence Day holiday. Tesla shares continue to rise to a near 6-month high, rallying some 25% over the past 3 sessions, following better than expected second quarter vehicle deliveries. Nvidia rebounded, but other mega caps were little changed. Paramount Global extended its gains after National Amusements reached a preliminary deal to sell its controlling interest in the media giant to Skydance Media. And First Foundation shares slumped after the lender revealed a $228 million unexpected capital raise. Well, the US services sector contracted last month and factory orders fell, the ISM non-manufacturing index falling to 48.8 in June, well below the previous month's level of 53.8. And on the jobs front, ADP private sector employment in June rose less than forecast to 150,000. Initial jobless claims rose to 238,000 last week, in further signs of a softening labour market. Meanwhile, minutes from the last Federal Reserve policy meeting showed officials acknowledged the US economy appeared to be slowing and that price pressures were diminishing. It said the vast majority of participants assessed that growth in economic activity appeared to be gradually cooling, and most participants remarked that they viewed the current policy stance as restrictive. Well, the weaker than forecast economic data saw Treasury yields fall, with the 10-year down almost 8 points to 4.35%, the 2-year at 4.7%, and the US dollar also fell following the data, which boosted expectations that the Fed will begin cutting interest rates later this year. The Aussie rising to 67.1 US cents. So let's get across those market movements. Ira Epstein joining us from Linn Associates. Ira, very good to talk to you on what, as I mentioned there, are shortened trading days. You head into that holiday tomorrow, your time. Of course, a focus there on the data with, once again, bad news being good news.
Well, this time bad news is bad news in its own way. That's how you look at it. What I looked at today, and the number that got my attention, wasn't the ADP as much as Challenger report either. It was the service sector going into contraction. This is the first time in a while we've been under the 50 level. And once you do that, that has been the one thing that has held up the U.S. economy. It isn't manufacturing. We've seen those numbers terrible. It has been the service sector, and that's what we've been looking at. We've had wobbles for the past 8 weeks or so in labor data. We'd be getting the unemployment claims. They would be bigger than we thought, then they'd immediately correct. That isn't the case now if you continue looking at the continuing claims. They keep rising, not the weekly. The weekly still has some noise, but what's happening there also is those numbers aren't falling apart. On Friday morning, when we reopen, we will get the Labor Department, and we're looking for that to be about 190,000 to 200,000 new jobs, which is still a good number. The unemployment rate is roughly 4%, and both the monthly and the yearly employment wages to come down a fraction, maybe a tenth in each one of those. But what's happening is we're rolling over. It's slow, but it's a rollover. The market today, when you look at what it did, if you're watching the metals, they soared. But remember, you have holiday trade in America. I run a brokerage division. I know, I see the volume. And we are probably running 20% over the past 48 hours of what our norm is. So it was easy to see people were going to go away. And what the market looked at and what set it all off was the fact that we're getting that rollover. The Fed minutes came out. And you have members still debating, is it too soon to cut or not? It's going to take a combination of this labor report. I think this one's very important to show at least that the market isn't strong again. And then with the other numbers, the service sector and seeing CPI not rising at least, and PPI getting another month under our belt in the month of July. And then you open up the door very possibly for August to be weak and September becomes a live month all of a sudden. At some point, the U.S. Federal Reserve will make a decision to get ahead of the curve. It's not going to be, in my opinion, the July FOMC meeting, but after that, I think every meeting is live.
Okay, so yeah, you're saying on those numbers you're seeing, on the trends that are developing, the most likely bet in your view is a September cut.
That's correct, right now. So what I'm counting on that, and I want to be clear, that I'm going to get the reports that come out in for the month of July and the one that we will see then in August to say that we are weakening. I'm counting on this report on Friday showing weakening labor. If it's not, no, then I'm not in the September camp just yet, then I'm in the December camp. But as I've said here, I wanted 3 reports in a row to show weakness. I've said that over and over. I have a good shot of getting that, and I'm excited because the service sector broke down. And that to me is a good sign. Plus, what you don't hear in a lot of the papers, we have a notice called a WARN, a WARN notice. And if you're a large corporation, you have to send out a notice 60 days ahead of time that you're going to let employees go. Thousands of those notices have been sent out west. It's been very quiet, but that is what's happening. So I am seeing the markets starting to reel in. You can't tell me the manufacturing's out and hiring. All you need to do is look at the indices, the employment index with it. It's not there. So the slowdown is happening, not a crash, but what the Fed wants. And at some point, they have to come out of first gear and go into second gear and say, let's get ahead of the curve.
All right.
Remember, they started raising rates March of 22. So we are a year and a half down the road and we're finally seeing the reaction.
So is that soft landing scenario still in place, do you think?
Yeah. That doesn't mean at some point along the line you won't see a 10% correction in stock indices. That does not mean they're falling apart. By any stretch of the imagination, the market is overextended. Making matters even a little crazier, the month of July, if you look at the NASDAQ futures contract, 15 years in a row, if you bought July 1st and came out July 29th, you made money. That's not to say that this 16th year will make you money. I'm not going on here and saying that at all. I am quoting the past. So to me, that tells you there's strong seasonal still in place. And what did the markets say? Weakening is going to drive the markets higher, be it the commodity markets, be it the stock markets at this point in time as well. That's what I'm saying. So no, if I'm going to be wrong, I'd like to buy a deep break and be wrong on that break, that I didn't buy it maybe low enough. But I think that you'll find that the breaks are going to be short-lived, and by the end of the year, we'll be here or higher where the indices are now.
Yeah, it's, as we've spoken of before, Ira, you've got that narrow leadership still, particularly take a look at the S&P 500. Take a look at the equal weight S&P 500, then it looks pretty ordinary.
Yeah, the RSP. And I've been showing that in I do daily reviews. They're on the front of my website, in fact. And when you look at it, I've been showing the RSP and pointing that out to people, that this is about 8 stocks. That's what it's about. And even Tesla's coming alive finally. So it's joining the parade. And Tesla, if it has a good July and does anything positive with its robo, will be a live company. Could be $300 by the end of the year. So I look at these markets and I am liking what I'm seeing. But would I go chasing the RSP ones? In other words, the ones that aren't the really leaders? No, I don't want to buy anything that's not the leader. I want to buy the lilies if you're going to be buying something. I think you're sitting there buying the Amazon. It's the unique thing about the retail. I think you're looking at companies like that. If you're going to go down a tier or two, I think you hold back on it. It's not there right now.
And Ira, you mentioned metals came alive overnight. How are you feeling about those commodities at the moment?
I got excited. Today was the first day I'm coming on and saying to you, I think the correction ran its course, past tense in copper, in the gold, and in the silver. That does not mean I'm telling you to go out and buy a dollar rally in silver that it did today, or to pick up a copper after a 12-cent bounce today. But understand the dollars that I just mentioned, a dollar in silver, 12 cents higher in copper in one session. The market's telling you a story. It got overdone. And it's the story we've talked about, Andrew. If you're going to cut interest rates, forget America. Let's talk everywhere else. The countries that are going to cut interest rates are saying they want to spur on activity. In order to spur on activity, industrial metals, precious metals will come alive because you're going to build inflation stories again. And if you're going to take interest rates down in America, that's a little bit bearish on the dollar. And certainly it takes a headwind away in higher rates if that is what happens. We haven't cut the rates. I don't want you to be ahead of yourself, but I do want you to look at this week's lows in the metals. And until they're taken out, I think you should make a statement that a trade bottom low is in place in the gold, silver, and the copper.
Ira, always great to get your strategy. Thanks for joining us from Linn Associates.
Thanks for having me with you.
Let's check where we're likely to get going. And as you can see, looking for a very strong start on the ASX 200. If you take a look at those SPY futures, they're up almost 1%, given that positive sentiment we saw on global markets overnight. Stay with us because the open is just a couple of minutes away.